Welcome to Optimum Forex Trading. Robina from Zim's Trading Journal. I trade ICT concepts, having learned how to trade off the free mentorship program provided on his YouTube channel. My main focus is trading off fair value gaps or order blocks, and I trade within the London morning session. My main pair is cable, which is Great British Pound versus the United States dollar. If you want to learn to trade like me, then head on over to the Inner Circle Traders YouTube channel, where he teaches algorithmic price action trading for free. My disclaimer, guys, please view everything you see here as entertainment and not any form of trading, financial, or investment advice. Also, I want you to know that I will never, ever, ever DM you. And if you are approached by somebody using my information, please immediately block them. All the links to my communities are found on this channel, including my email address, so use it if you need to. I'm here for you, but you are the one who will have to reach out to me. I will not reach out to you. If you find my channel entertaining and you feel compelled to support my trading journey, please hit the like button, subscribe, and turn on the notification bell so you can be notified every time I upload a new video. I'm grateful you came, and I hope you stay longer. All right, so let's get into today's trading. It is Tuesday, 31 October 2023, just before 10 a.m. New York time. Not New York time. It's before 10 a.m. in Zim. However, where New York is concerned, it's before 4 a.m. New York time. All right. If you've been following my journey, you know that since I trade ICT concepts, I have to use the New York time frame for my trading view chart. This is why you see I am on UTC -4, which is New York time. My kill zone is between 2 a.m. and 4 a.m., meaning I have to look for a CB or a BC within that time frame or an order block. So looking at price right now, there isn't any clear indication of a CB or a BC. However, because Monday left this BC, it is possible that we are in a continuation bullish as well, because we saw this retracement. This was Monday's trade, then this pulled back or retraced into the daily CB, and it could be using the daily CB as an inversion fair value gap on its way up, considering as well that we are on the last day of the month of October, so we could be creating the tail of the October month candle on its way to closing price for the month of October. So it's possible that this is an inversion fair value gap. And if you remember my previous video, I had mentioned that I would be moving my stop loss a little bit lower if I felt like price was going to be bullish, because it kept on resisting trading lower than this initial H1 BC. This one, as you can see, price created relative equal lows here, then the sell side was taken there, and then this sell side was taken here. Then price didn't trade any lower. It created its own BC, and this BC's sell side was taken by this price action yesterday. So it is possible that we are bullish where the market is concerned for today, because it wants to create the low or the close of October. So seeing as I moved my stop loss a little bit lower, let me just show you how I am doing where my MT5 is concerned. I was stopped out yesterday. I wasn't on my charts because I don't trade Mondays and Fridays, but since I was protecting my equity, I was stopped out here at $258 in profit. So meaning I still need $250 to get to target. And these are the trades taken so far. And if we go to this one, again, if you've been following me, you know that this is the account that transitioned from 8 cap to think markets, and here we are. I am $259 in profit, so almost similar. We need about $250 in both accounts. So since I trade order blocks and fair value gaps, if you look at my kill zone right now, there isn't any indication of a fair value gap or an order block. An order block is a run up to liquidity. It could be in this leg right here, but it's not clear like how this one was. All right, because this is like a retracement or a pullback leg. There isn't a green candle or white candle in here and then continuation to indicate an order block. It's just a bearish leg, complete bearish leg with no breaks in between. So since it's a continuation, it probably is an order block, but where entry or possible entry for the order block is concerned, I am not sure, I am not clear. And also this price action going up, it hasn't left a busy to indicate that price is probably continuing. This one hasn't closed yet, the 3 to 4 a.m. candle. If it does close with a gap, I will probably consider using that gap as a possible entry, continuation bullish. But there's something that I would like to maybe note whilst I am here. We look for BCs or CBs or fair value gaps at break of structure levels, meaning my break of structure is here at this swing high. So price has got to break past Asia open price, past this swing high, and then I might consider putting in my entry and ride it up. My challenge being, how far up is it going to go? I don't know. We do have a CB sitting right here that could act as possible resistance on its way up. We also have this order block here, and we also have this daily CB as well. So it's possible that price is going up, but how far up it will go, I am not sure. So I could use maybe the bottom of this candle painting right now as possible stop loss range, because it's $50 stop, my risk that is, and then we'll see how the day closes. So I'll be back a little bit later to maybe show you if I've taken an entry and if we are still in the trade or it will be taken out. Okie doke, I will see you soon. Looks like a big mistake, doesn't it? So we are probably going to be down $50 in under 10 minutes of placing a trade. My network on TradingView. There you go. We are back up. Okay, let's just look at price action now, hoping that our stop loss will hold and that if it does come down here, it won't take us out, since the stop loss is just below the bodies of these relative equal lows. But Mr. Market does what Mr. Market wants to do. Okay, so I guess I'll be back again soon to let you know how it ended up. Alrighty, see you in a bit. I would like to highlight how sometimes when a trade is going in the opposite direction to what you thought it was going to do, a person can panic. You heard my earlier video when I mentioned that I look like I could be taking a loss in just under 10 minutes of me putting in a trade. And the reason why I felt that way was because of that red candle that was painting. And that red candle is the one that's currently painting now, the 4:05 a.m. candle. It did open. It came all the way down here. My entry is here. It came all the way down here, and then it started going up. But as it painted lower, you know, your mind starts thinking and doubting your initial analysis. I did mention in the first video that because we had taken sell side, this would be Thursday, sell side, we had taken sell side on Monday, created a BC, and today's price action could be a continuation after the retracement, so we might be continuing up. I had also mentioned that we were within a daily CB that could be used as an inversion fair value gap, meaning it could be used as support to support price launching up, and also that these were relative equal lows and the bodies of these two candles didn't close below that daily CB. All of that I mentioned before I put in my entry. Once I put in my limit order and then price opened up and started going lower, I started to panic or to doubt myself. But because one of my rules is never to move my stop loss, which is this one, do not move stop loss, I couldn't collapse this trade, though I felt like, oh my goodness, maybe I made a mistake. I thought, you know what, I had offered Mr. Market my $50, so let me just allow Mr. Market to take the $50, and then I'll come back tomorrow and reanalyze and maybe put in another entry. So it's just to speak maybe to somebody who is trading and who does go through those moments during their trades. Just to reassure you that it is normal and everybody goes through that. And remember, when we put in our trades, we are not going to hit 100%. We won't get it right 100%. The idea is to get it right more often where it leaves you profit. So you can maybe place 10 trades, and out of those 10 trades, 7 will be losses, but the 3 that you actually win will end up covering those losses and might leave you in profit. So that's it. I'm guessing now, or actually not guessing, but I'm thinking that the reason why price decided to open and trade lower a bit is because it was coming to the midpoint, which is the consequent encroachment of this daily CB. It was coming down back into discount before making its way up to premium. That's the only reason why. So if I remember this for future reference, I could maybe put my entries a little bit closer to the consequent encroachment of any BCs or any CBs that form, and price usually or normally comes down to either the discount or to the premium, depending on the direction of the market. So right now, since I'm still in this trade and we are now just over $40 in profit, price might want to come back to this BC that it is creating right now and maybe reprice it as well. So I'm going to mark it temporarily since this candle that's currently painting hasn't closed. We wait for the candle to close and see how big the gap or the BC it leaves. If it does, I am considering, the reason why I am saying I am considering this second entry is because I was watching this weekend, I was watching videos on hedging or pyramiding trades. Okay, so let's assume that this gap is left. All right, and say this gap is left, and if it's left, I might want to come in and probably put in another position and ride it up. If I decide to do that, seeing as this trade that I'm currently in is here, that's the entry, I might then move my stop loss to 10 pips. That's 10 pips. And then this one, I will move it up maybe to 10 pips as well, like that, 10 pips as well. And then the 10 pips for my initial trade and the 10 pips for the second trade should come up to about the $50 risk anyways. This is my consideration, and then I will pyramid on that. So I will decide at the close of this candle that's currently painting if I want to pyramid my trade. And then let's put this back to 20 pips. If I want to pyramid my trade and then move this risk a little bit lower to make it less, right? Move it up a bit to make it less, so that if the price does decide it wants to come back again to this CB, at least it won't do too much damage where my equity is concerned. Okay, so I'm back just after 12 in the afternoon in Zim and just after 6 a.m. and this is what price is looking like at the moment. So because I'm still learning, I'm not sure if this here, this BC that was created on the H1 time frame is a breakaway gap. I'm yet to fully understand the difference between a normal fair value gap and a breakaway gap. So where my entry, if I want to pyramid on this is concerned, I think I will put it just at the beginning of this candle that is just painted, just here. So at the beginning of this BC is where I'll put my possible addition to the limit order that I'm currently in. And then with this initial one that I went in on, I will put it back up at break even. Okay, or maybe not break even, just maybe a few pips below break even, maybe about 5 pips maybe. Let's see, 5 pips there. And then this one, let's put it at the 5 pip mark. So this one would be 17 pips plus the 5 pips, or I can maybe bring it down a bit lower to the consequent encroachment of this H1, which then gives me 14 pips plus 5 pips, which is 20 pips, and that would then be a $50 or less $50 loss because I am still in profit on this one. So if this one takes me out, it won't be too bad where $50 is concerned. That's additional entry. So I'm putting my limit order in now, assuming that price might want to come back or retrace back and reprice this BC. However, if the candle that's currently painting now, which is the 6 to 7 a.m. candle, creates its own BC, I might consider entry at that BC and move it from this BC that it's currently at. So let's put in our pyramid entry. Another thing, maybe instead of me risking 0.25, which would be the $50 initial risk, maybe I can risk a little bit less since it's a pyramid to the original. I am torn in between and I am not certain. So maybe let's risk a 0.20, which, if this is 14 pips, let me just calculate that. 20, instead of it being a $50 risk, it will be about a $40 risk or $35 risk. Actually, it's 15 pips, so it's a $30 risk. So okay, let's put it at 15 pips. So our price point, right, entry price is here. Let's put it round figure again, right there. Copy that, and this will be 15 pips, so 150. And then we'll copy that stop loss. So I said 20, right? So we are putting this as a pending order, a buy limit again, adding on to what we already have, and then that's the limit order price that has tagged, would put us entry right there. That's if this candle that's painting is going to come in and maybe tag us in right there. That's if it comes in and uses this here as the busy. That's if it covers this entire candle. However, if it creates its own busy here, I might consider moving my entry up a little bit. So whilst we are here, let's go into the second one and put in our buy limit again, 0.20. And we want to put this as a buy limit, and that is the price right there. Let's place that as well. Okay. And then I will go back in, and then I will take in my 15 pip stop loss, and I will add it there. I know there's some people who don't trade with stop losses, but rather if they're in drawdown, they'll actually add on to their position, and they call it repositioning. It's I think another angle of trading if you know what you're doing. But if you don't really know what you're doing, you can get burnt real bad. So now that I have put that one in, maybe let me now move this stop loss up a little bit, just so that we minimize the risk exposure. This stop loss is going to be moved up a little bit, as you can see. So I'll be stopped out just about maybe the same price point if market decides to come back all the way there, which is okay. It is the risk that we have to take when trading, because there you go. You can see you never know how high it's going to go or how low it's going to come. So now that I have this fixed, let's put that as our new entry. So this would then be our new account. If our new entry, sorry, if price does come back and take me out there, I will know for sure that I've been taken out on the second account, or the second entry, the first entry. If this second entry that I've just marked now, price comes in to draw down and then knocks me out, stop loss at 15 pips, I know that the next stop loss is taken as well, which would then be my entire 20 pips, which should be just under $50 where risk is concerned. So I'm all right with that. So I'll be back again, I think in about an hour, to show you if price has completely repriced the current busy that is trading, trying to trade through, or if it has left a gap. If it has left a gap, I might consider moving up my entry. If not, then hopefully price would have come up and repriced completely. Like I said, I'm still learning on the difference between a normal fair value gap and a breakaway gap. So this could potentially be a breakaway gap, and this could potentially be the busy that's currently being formed. Also being mindful of time, because New York kill zone is from 7 a.m. to 9 a.m. We are currently trading in the 6 to 7 a.m. candle. So the next candle, 7 to 8, will be the start of New York kill zone, which is from 7 to 9. So the next 2 hours after this, so 7 until 9, will be New York kill zone. So it'd be interesting to see how New York kill zone will paint, if it will also create its own busy, or if it will come down to reprice this, and hopefully our price or our stop loss will hold. And also this daily inversion fair value gap, the top price of it, hopefully it will hold as well. If not, we will be in loss, though not drawdown, we'll still be in profit, but we'll need to start again where climbing the milestone is concerned. Okay, so I will be back again very soon. See you in a bit. Okay, so almost an hour later, just 2 minutes before 1 in the afternoon, which is just 2 minutes before 7 a.m. New York time. And as you can see, price seems to want to continue pushing up and has left this gap. I was watching a video, because I mentioned earlier that I wasn't sure about breakaway gaps, and this is something that I reposted on my Twitter account from the ICT Academy. I think this guy just simplifies, as he says, concepts, right? And I was watching the breakaway gap video that he posted, And with what he is saying, I have seemed to understood that this here, this block right here that I've highlighted, is a balanced price range, meaning price really doesn't need to come back all the way down here, because this whole square is a balanced price range from this retracement all the way up to the beginning of the open price of this 5 to 6 a.m. candle. So this then, since it's a balanced price range, this then would be a breakaway gap. So I'm hoping that's how I understood it, and that's my confirmation to move my entry to this BC instead of this one. However, what I'll do is I will move it maybe into discount just below halfway point, because if we measure our fib, we measure the gap. If the New York kill zone is going to retrace a bit before going back up, it will probably want to retrace into discount first before going up to premium. So I wouldn't mind putting my limit order in discount. And even if we use the quant fib, let's see which one, this one. Even if we use this one as possible, maybe I could put my entry between the 0.50 level and the 0.75 level, just in between it. And this stop loss, the 15 pips, will be close to the bottom of the BC, which is the breakaway gap. Again, hoping that price might not come all the way down there. If it does, this time it won't take me out like in a loss, in the $50 risk or loss, but rather it might leave me $10 or so, because my other stop loss, where I put the 5 pips on the initial entry, will be down here somewhere. So if this takes me out, this will take me out for $30, and then we'll see what the other amount will leave, and then I might collapse the first trade. So let's move our limit order up to this price point instead. Copy that, and then we want to paste that there, and then we want to copy the stop loss as well. Then we want to place that there, and then we want to modify it. So you see, we've just gone up a bit above our initial entry price. So if it comes down and it takes us out here, it will take us out for $30, and then maybe this will leave us a profit of $10 or so. I'm not sure, and then maybe we'll just collapse it there. We're currently on $105. We need another another $100 for us to get to target. Okay, so if this one, like, it doesn't come to retrace, for instance, if it chooses not to retrace but rather continues up, I think I won't try to pyramid my entry. I'll collapse it, because you can see I've tried, and normally when market leaves without me, I don't chase price, so I won't chase this one. I'll leave it as is if it doesn't come to tag me in. Maybe my entry is a bit too low, I don't know. So is that it? No. Let's copy that and then paste it at the stop loss, 15 pips, and modify that. Why is my stop loss not changing? Copy that, go back here, and then paste that. Right, modify that. There you go, it has changed. So yeah, so let's watch price. Let's see what it's going to do. If this is too low an entry, let's assume price doesn't really want to come and reprice completely, or it doesn't want to come down all the way here, but maybe it will come and use this top price, or maybe up to here somewhere, and then continue up. And if it doesn't tag me in between the New York kill zone, which is 7 to 9 a.m., that's the price painting now. The 7 to 8 candle is painting now, then the 8 to 9 a.m. candle will paint next. If those two price points tag me in, I will collapse this second entry and just leave the first one to run. So I will be back again in an hour. I will see you soon.